is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Okay, folks, this is Ed McMahon setting in for Johnny Carson, also known Eddie McMahon as Larry Pesavento, setting in for Tommy today and tomorrow. Hope we'll make it a little bit entertaining. At least we're getting a little action in the market, especially the NASDAQ, which has been, been going straight up. Now we've had a little bit of a correction. Big ABCD in the NASDAQ comes in at the 55-60 level, about 100 points from where we are now or so. Let's take a quick look at the news. I just posted this thing that one of our Den listeners sent to me about Janet Yellen, saying that there's virtually no chance of a market financial panic in our lifetime. I think she was talking about herself, and maybe she's not planning to live through the 5th of October. I don't know, but for her to say something like that, that's just that's almost as bad as some of the tweets we see on Twitter. What is it, Twitter? Oh, Twitter. So I don't know. We'll see how long it lasts. But if you remember, back in October of 2007, I started in December of 2007, I believe, doing the show for TFNN, and on October the 7th, that's when Bernanke came out and said all green lights on the financial market, everything looked smooth sailing ahead, and it sailed about one day, and then it took a flying Melinda and dropped about 85%. So when you see stuff like that, folks, that's just a professional trader sees that, and he just literally gets frothy at the mouth. And you can see what happened to some of these stocks. Now, the banking stocks held up incredibly well today because of the news that they were going to get a really good deal as far as their rules or whatever they're going to do with Dodd-Frank or Frank-Dodd or Manley Hall or something like that. I don't know what it was, but it was one of those things. But if we take a look at the banking stock, you'll see it closed in about the middle of the range, and it stopped at the 78% retracement of the high from last March. It also made a 1.618 expansion from the high that we made in May the 5th. So there's some resistance up there. And with the news as bullish as it was, you would have thought that they were going to, explode it and, get it up to the high ground there quite a bit. If the banks hadn't been up, folks, I think the Dow would probably been down 200 and some points would be my guess. As it is, it's down 100 and something, but that's the way it would look like to me. I'm not sure, but because there's so many Dow stocks that are related to banking, you've got the Bank of America, and you've got American Express and J.P. Morgan and Goldman Sachs. I mean, Goldman Sachs is the biggest one because that's the highest price stock in the Dow, and it was up 5 or 6 points at one time. So those are the things that you might want to look at, is check those stocks out. Maybe we'll do that tomorrow when we do the show for Tom, just to keep an eye on, what things are happening over there. Now, what I usually do is I usually go down to the Dow Jones Industrial Average to show, what the market is doing as far as the Bradley model. And if we put this up here, this is pretty much up to date for today. You'll notice that the Bradley model had a top there around the 19th of June. Let's try that, June 19th. And that means that we should have a low coming in right about the end of next week, right about on July 8th. And so that should be something that'd be very interesting to watch. Actually, the 7th is a Friday, so that would be the day you'd be watching for it. Now, if it's down that day, I would wait until Monday, because you don't want to buy if the market is sharply lower. Now, if you look at the Dow a little closely, I've marked in here the two swings that met today at the Dow's low. We made a 382 retracement of the low from May 15th, which means this market is still really pretty bullish. And we made a 61% retracement off the small swing from May 28th. So all of that says there's pretty good support at 21,180, 100 points from where we were. We rallied over 100 points from the low today. So that's what's happened, with the Dow. It's the NASDAQ that has been the big, the leader of pack on the downside. So it certainly has a bearish formation in the NASDAQ, even though we could get some really strong rallies in here without too much trouble. One of the things, of course, that's been in the news, and we've been following it very closely on our show that's on from 9 to 10, and we'll see here that if you look at the Treasury bonds versus the Treasury notes, you'll see the collapse in those markets, which means interest rates have spiked and spiked very hard. This started with the German Bund in Germany on Monday, and it has continued. Evidently, there's a consortium of the central banks are getting together to push interest rates higher. That's one of the reasons why the banking stocks were so strong, along with the federal regulations being changed a little bit as far as their stress test, but that allows them to charge, more. They'll be able to get more interest rate as interest rates go higher. So we'll see what happens with the banks, based on that. But basically, I'm just a technical person. I'm not a fundamentalist, and I don't follow the politics and stuff. So it's a little beyond my pay grade. But I still listen to what they're saying, but I'm not sure, what exactly it means. We'll cover gold and silver here after we come up to the first break here. But last night I did a 2-hour webinar about my life as a trader, and there was a couple of questions related to the same thing that I'll cover after we come to the break. And the question related to how did I make so much money so fast in a period between 1972 and 1974. It was about an 18-month period there where I ran 30,000 up to a little over 1.2, but I was able to actually run it from 1.2 down to minus 2,700. And you know what? Even when I did that, I wasn't even upset. I didn't lose a night's sleep. I knew I could make the money back. I mean, it was just, I knew that I had done something stupid. What I had to do was to go and look at all my statements to see what I had done wrong. And the one thing that I did wrong all the way was adding to losing positions. And I'll show you why I did that when we come up to the next break, because I just violated every conceivable trading rule and money management technique that you could possibly do. But, like they say, the smart man learns from his mistake. The wise man learns from the mistakes of others. And I had to learn from myself. So my head was bouncing off the table every time I learned a lesson. So take a break. 877-927-6648. Setting in for Tom O'Brien, it's Larry Pesavento.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien, and I wanted to answer a question from several people from the webinar I did last night about, how I made so much money so quickly. I posted a chart in here to let you take a look at cycles is basically what I started looking at in 1970, looking at Jim Hurst's book, The Profit Magic of Stock Transaction Timing. And a service came out called Cyclotech that did all the work for you. In other words, it found the cycles and put them on your chart, and they delivered those to you Saturday morning by special delivery. And so you would have all your cycles, right there on your charts. You could determine where you thought the bottom was going to be and where you wanted to buy. But the simple part of this is basically what we're looking at here in crude oil is you're looking at basically a 34-day cycle. And as you can see, it's relatively close. You'll notice those trend lines that we have there, those were called valid trend lines. Now, Hurst had several rules. Some of them really were not very good, like synchronicity. Harmonicity worked pretty good, but synchronicity and some of the others, nominality means that there was a nominal cycle, usually between 18 and 34 days or 36 days, and you can see here we pretty much had the same thing. But the one thing that he did point out that was really important, and this is how I lost all the money, this is the answer to the question. I'm going to show you the next chart, and what I'm going to do is I'm going to put on, what happened when you had the. Let me just get this up here so we can talk about it together. If you'll take, I'm coming up. The chart is coming. Did the first one not come? We'll do the second one then. Shut the front door and raise the rent. Let me do the, I'm ready to talk about this one, so let's just bring it up here. Okay, this is the same cycle. All I've done is I've shown you notice how the cycle crested early in the cycle on the left-hand side? That's known as left translation. Left translation is very, very bearish, and that's what happened. You see, I would buy on the 34th day, it would rally 5 or 6 days and then go down for 23 days. That's not fun. And when you're adding position on the way down, you're increasing your margin, you're increasing your risk. I did everything, possible wrong, and I was long beans, wheat, corn, and when it hits, and I was not a very smart camper, but I learned. It wasn't a big deal, but I just wanted to give you an idea of what it looks like. Now let's take a look here at the NASDAQ. This was the NASDAQ as of yesterday, and I just wanted to bring this to let you show you where we are here. If you'll notice here with the NASDAQ, you see the same type of cycle that's there. That's nothing more than that same cycle. This happens to be 36 5-minute bars, and it works on any time frame. The problem with the Hearst stuff, folks, it only works for 1 or 2 cycles, and then it starts to shift, and it shifts by Fibonacci numbers, expansion and contraction, and then you get into, it just gets too complicated. And that's how I later on, 6-7 years later, I got involved into the astrology, because I could see the astro stuff much easier because the days were so accurate, especially when we were looking at full moons and new moons. So that's what I was looking at. But let's get back to this NASDAQ so you can see the bullish implications here. So just give me 1 second, and I will bring it up here, and there it is. I'm getting a little better at this in my old age. All right, we'll take a quick look at it here. Now you can see the cycle cresting on the right-hand side of the cycle. That means that the market is very bullish. That's known as right translation. So when the cycle bottoms early and then goes up and crests late, that's known as right translation, and that's bullish. If it bottoms early and crests early, that's known as left translation, and that's bearish. And that was one of the things in the book that really has held true through all the years. The nominal cycle thing is pretty good. And of course, the harmonicity is nothing more than another way of looking at harmonic numbers, which is another way of watching it. But that's what happened was, you see, I was buying those bottoms, and they would rally for a very short time, giving me left translation, and then, down the sewer it went. But that was my fault. I even knew it was happening, and I still screwed it up. So it was just one of those things. In fact, it was a blessing in disguise, believe it or not, because I never would have. I found the Gartley book right after that, and I had it, but I hadn't read it, and that made me read it. And I didn't trade for almost a year before I got back into the markets using the Gartley pattern and things like that. So that's pretty much what I've done. If you look at some of the other books that some of these guys have written, many of them have done actually the same thing that I've done. Unfortunately, like I say, the old Chinese curse. Yeah, the wise man learns from the smart man learns from his mistakes. The wise man learns from the mistakes of others, and you certainly want to be a wise man when you're learning to trade, is to learn from others people's mistakes. One of the big advantages that we have here at TFNN is that Tom has put together a really great group of folks, plus the people in the den. There's some really smart folks in that den, folks. I mean, they're really they're flat out on their game. There's no question these guys know what they're doing. That's something that's, I see this every day, especially when I'm in there early in the morning and they're lining up the trades for the day. They got some pretty smart cookies in here to pay attention to anyway. Now, we had one market that made a really interesting top today. Now, this is a shorter term cycle, but we'll put it up here and let you take a look at it. It hasn't, backed off very much, but it's still backed off a little bit. Hold on 1 second, and I'll answer your question, Gator. This is the, you can see the high in the crude oil today was at 45.45. We backed off about 1%, 1.5% since that level, and we're looking for the last correction that we had was $1 a barrel. So we should look for really good support at 44.30 in crude oil, August crude oil. That would be the 61% retracement of the low we made on the 27th, and that would set up another ABCD structure. Now, Gator's asked a question here, what is cycle length the same for different time frames? What it does is whenever you find one, if you find like at 16 bars or 32 bars, look for the next one to come in at 32 bars. It usually works for 2 or 3 cycles, and they're all different. Sometimes they're 8, sometimes they're 13, but when you find the first one, begin to look for the second one. It goes back to that same thing in the Bible. As above, so below. There's nothing new under the sun. All that is the same because the market repeats itself over and over again. This is why pattern recognition works. This is proven by Andrew Lowe in his book, the non-random walk down Wall Street. That's basically what that was talking about. And if you go look to see what's happened in the past in these markets, you're going to be able to see partly what's going to happen in the future. That's why this comment by Janet Yellen is so troubling to me. I mean, well, not troubling to me. God bless her. I sent her a dozen roses today. But I just think that's not the thing to say. Being the Federal Reserve Chairman. I mean, that's great. Hey, Bernanke did the same thing. What's his name? Greenspan did the same thing. The only guy that never really talked very much about it was Volcker. Volcker kept everything close to his vest, and I think that's why they got rid of him. But anyway, remember when they made this thing about the stress test for the banks, the Federal Reserve is a bank for bankers. So don't be surprised when you see something like that. And that's why the news was so well taken. But, the Dow could have been down 200 points easily if those banking stocks hadn't been up. 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the U.S. dollar index. By the way, this is Larry Pesavento setting in for the master himself, Tom O'Brien. I'll be here today and tomorrow, but we'll take a look here at this U.S. dollar index. This one was absolutely perfect setup to rally. As you can see, we rallied maybe a day and a half from that 96.50 level, and then we gave up the ghost, very, very quickly to the downside. And this has some bearish implications telling us that we're going to go down to at least the 78% level in the dollar index, which is down around the 94.50 level, which is easy. Once we cleared that 112.90 level in the euro, that was telling us that it most probably was getting ready to see, a pretty big move, to the downside if that were going to be the case. So we'll see if that in fact it does happen. Now, one of the things that I think would be fun here to do, but since I'm doing this show for Tom, and Danny asked a question, what would you do? What would you go back and change one thing in your life? What it would be? One thing? Well, Danny, I tell you, my life has been so good. I really don't think I'd have done a whole lot of things different. Even with the silly things that I did, it all worked out. I mean, I'm still above ground, staying away from open graves. I can still feed myself, bathe myself, drive my own car, read a book by myself, watch TV by myself and my wife Sarah. But I don't think I would have done a whole lot different. I really don't. I mean, it's been pretty much a charmed life. I think the financially it would have been better for me if I would have stayed with Drexel instead of going to the floor of the exchange. But then again, Drexel, they went under, and all of the stuff I would have lost it anyway. So it didn't make any difference. The thing that was really surprising to me is when I first lost the $1 million. I was a kid. I was only in my early 30s, and I came from nothing. I mean, we had you heard of church mice? The church mice used to run us out of church because they had more food than we did. But I made it through, but I knew I could make the money back. I mean, it was like not even. I never really, the only time it ever bothered me was I had bought a new Mercedes, one of these 350 SL coupes, convertibles in Beverly Hills, and I put a $1,000 deposit on it. The car was only $12,500. Now they're like $100,000, but for $12,500, I got this little sports car that I wanted to have, and I put $1,000 down, and it was going to be delivered a year into the future. Well, it came time for the car to be delivered, and I was bucks down at that point, and I couldn't pay for the car without financing, and I never did that. So I was going to go in and tell them that, look, I'm just not going to be able to take the car. And the manager of the dealership called me and asked me to come in, and I said, uh-oh, here we go. So I walk in, and he came in and he said, look, we're not going to be able to deliver this car until next year. He said, can we just maybe buy it back from you, give you $2,000, and that you would wait till next year to get it? And I said, well, okay, not a problem. And then when we finished everything and I got the check, I said, by the way, who's getting the car? And he said, Elvis Presley. He bought 12 cars for his entourage of people. So that was the only good part of losing all the money, is I did get my $2,000 back. Anyway, that's Danny. I don't know the answer to that question, but I don't think I'd have changed anything. I really don't think I would have. It's just the friends that I've had, the people I met. Overall, it's been pretty good. So no complaints. If you had hindsight, I'd have bought Microsoft in 1982. But then and Google in August of 2004 for $69. But that you don't have. So anyway, I hope that helps a little bit. What were we talking about? Someone want to remind me a little bit? Oh, here's what I want to do. I want to walk through what I'm looking for in this trade that we're looking at with the crude oil. Let's just take a quick look at. You'll see here when we're watching this crude oil right now, we made the first ABCD pattern up there at the 45.30 level. Now, all I did here was I cloned the first ABCD swing. That's all I did, and then I moved it over, and I'm expecting the BC swing on the second leg down, and we're trading at 44.79 now. If it's going to be equal to the last swing, that'll come in at 44.44, right around 44.50. So at 44.50, we're going to be just about $1 a barrel lower than just like we were back on June 27th. It's going to make the same type of pattern. So you could buy it there, and you don't have to risk more than about 40 cents. So you're trading a $44,000 contract for roughly $400, which is, certainly acceptable. So that's what I try to do each day, is to set up, things like that and watch what the market has done in the past and move it over. As a matter of fact, if you wanted to be, really clever, you could clone that same line and move it back into June 25th, and you'll see, what did we do? We moved down another $1 a barrel. So it's dropping $1 a barrel every time it corrects. So it did it once, twice. It'll probably do it 3 times. So you want to pay sort of close attention to it. And that might be something to watch here in the oil if we get down to the 44.50 level. Anything below 43.90 would change the whole structure of this pattern that we're looking at. But that's pretty much what we're watching at that particular time. Whether that's going to be we'll see what's going to happen. See what's going to happen as we go through some of these things, and we'll be going through it. Okay, now let's get back to some of these charts that we want to take a quick look at. We've looked at the U.S. dollar. We want to take a look at the gold market here, because the gold is really trying to hold here. This is what we were looking at early this morning when we were doing my show right before the market opened for stocks between 9 and 10, right around 9 o'clock. We posted this. The bottom. 1 second, please. The bottom should have come in right around the 12.40.50 level. The low was 12.39.50, and then we rallied up to 12.47 and change after we hit the bottom down there. But the problem with the gold market, folks, is that it has some really scary spots. Now let me just show you the longer term picture here in the gold. I hope this helps taking a look at this, but this is the 4-hour chart going back over the last 2 months. And as you can see, we have that first ABCD structure that finished there at 12.46. We rallied $17, which is half of the harmonic number in gold. 34, 1/2 is 17. That completes an ABCD structure right there on the 23rd. You can see it right there on the chart. And if you take the ABCD and measure it down, you notice it gets you down to a double bottom and around the 12.16, 12.18 level in the gold. But the key point there is, if you look at that 786 this morning, that was right near within $1 of the exact low, and we closed at 12.45. So maybe that was a good bottom today. We don't know. All I know is if we take that out, we're most probably heading down, another $30 to another low, because the trend is certainly down. No question. 877-927-6648.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Okay, we're back, folks, and I want to switch gears here a little bit. We were talking about the crude oil. We're going to take a look at the Canadian dollar versus the U.S. dollar. This usually has a very strong correlation between the crude oil and the U.S. dollar, but that went bye-bye about 7 or 8 days ago. That correlation is just totally whacked out. But the Canadian is one of the big six, crosses against the U.S. dollar. As you can see, the ABCD structure that we made up there at the 138 level, that was a beautiful butterfly pattern. You had a 1.27 expansion from January. You had a 1.618 expansion from March. And from then, where it looks like we're coming down to near a double bottom. And what's interesting about this double bottom, if you'll notice the thin red lines there, showing the ABCD formations on the way down, you'll notice that the last rally high we had just earlier this week, late last week, was a nice little ABCD pattern. It was perfectly matched to the one that we had between the 29th, between the 22nd and the 30th. That's that principle of harmonicity again that Jim Hirsch talked about. And now you'll notice that the ABCD structure that we're looking at right here takes us down to the February lows. And I imagine there'll be some stops down there, but frankly, I can't imagine anybody being long this from May through July, but that's neither here nor there. But you want to watch this down at this 130 level because it's trading at 130.16 right now. The low was 129.70, so around 129.60. You want to watch this because if it holds that level, that could be a very, very low-risk trading opportunity. That's a 3 drive to a bottom, folks. If you take the low from May the 22nd to June the 13th, down to where we're coming in tomorrow. Now, because it's a Friday, I would think that I wouldn't want to touch this until Monday, and especially, with a short week coming up, Monday's going to be pretty much nothing, except that you're not going to believe this. This is really hard to believe. Do you realize they do not celebrate the 4th of July in the UK? I just found this out today. I was shocked. I couldn't believe it. Well, anyway, the rest of the world will be trading on July the 4th, but of course we will take our holiday then, but foreign exchange will be trading. And so you've got to, if you're trading foreign exchange, you might have to take a look at it early in the morning on the 4th of July to see how things are trading, because it'll be trading normally all across Europe and Asia. And you got to watch that level. Maybe we'll talk about that more tomorrow. But the Canadian has a really good chance of holding this level. And if it doesn't, you're looking at 120 or something like this on the downside with crude oil, with the Canadian dollar down in that area. So it's very interesting, to keep an eye or watching these things as they unfold. And there was one other cross rate that I wanted to bring up to you today to let you see it. And if I can only find it here, I don't know if I'm going to be able to or not. Yes, I can. And this is the Japanese yen here versus the U.S. dollar. You'll notice today. Yeah, well, we did win that. You're right. If we hadn't won that Revolutionary War, we would be speaking French and English for sure. And that would be the real English, not the stuff that I learned in school. But you'll notice here we have a downtrend in this Japanese yen. Today, we made a high up there at that 113 level. Not quite 113. It was 112.90. We sold off 100 pips from that level. And if this is correct, you'll notice that you'll have two ABCD structures coming down to the 61% retracement that comes in at 106.50. Now, if that happens, I imagine you're going to see that dollar index down to that 94.50 level, which is the 78% retracement. So those are the ones that we're sort of watching tonight and tomorrow and all the way through the weekend. But if you subscribe to the 24/7 newsletter, I'll cover that, of course, on Sunday and get those charts out, so we'll be ready to look at those things on Monday. I think it'll be interesting to at least watch it, because it's got some very good, potential of what we're looking at. I've already mentioned, the bonds and notes. Those are we're looking at a real rise in interest rates, folks. That is finally coming to fruition. We've already seen that this week, and that's just the very beginning. Now, what we're going to do, I know it's only the 4th of July, but because Tom's on vacation, I'm going to give everyone a early Christmas. Okay, I'm going to bring up the chart. That's going to be an early Christmas present. This is the long-term chart going over the last 2 years of the volatility index. Here again, you see the cycle formation that is there. We haven't really gone anywhere from that level. We might be up a little bit today with the market down a bit. But, folks, this is my prediction. And if Janet Yellen can say there's no financial panic, I can say that I think the VIX will take out those highs of August of 2015, and we'll get above 35 in the VIX, and it's trading at around 10, or probably around 11 and change today. So that's my prediction, is I think that VIX index could literally go a lot higher. And the reason for that is very few people are involved in it. And the second thing that's interesting is it's got a really nice pattern and very, very low risk here, because every time it gets below 10, that somebody starts coming in and absorbing it. So those are the things that you want to watch as you're doing this. But I think it's a pretty good chance. It's a good options play, too, because you'll see. You're asking when will exactly happen on the VIX at 35? Just a second. Let me go to my notes here, Mr. P, and I'll get it. Oh, I've got it right here. Yep, here it is. It's October the 17th at 10:38 in the morning, New York time. So October the 18th, 10:38 in the morning, New York time. And if you believe that, I still have 2 shares of the Brooklyn Bridge. I don't know where it's going to go. Write it down. Hey, now if that should happen, that would be what they call a coincidence. But believe me, I have no idea. I really don't know. I just think it's going to be one of those. Remember, the VIX got to 97 in 2007 or 2008 during the big debacle when the banks were too big to fail, and now they're too big to fail, which you got to be skeptical of that. But that's what I think it's going to do. The chart has got a possibility for it. A good way to do it is keep buying options. They expire after 3 months. Buy another one, because one of these times we caught a big move. In that first move just recently, it more than quadrupled. But this one I think could go many times because of the fact that it's set here for so long and no one has any interest in it, and that's what makes it so very interesting. And then when you see a comment like what Janet Yellen made yesterday, I just literally I was shocked, as well were some of my friends. That's the thing is, yes, I did have a friend that made a little over 500 large in the VIX, and that was during 2008, and he did that with a very, very small amount of money, about $8,000. But he was very aggressive, and he added on the way up and got out a couple of days before the top, but still made a really nice move on these. And remember that this business is a business of making money. It's not a business of being right or wrong. Take a little break here. For Tom O'Brien, Larry Pesavento setting in, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I wanted to update the volatility index chart, and I literally almost fell out of my chair here when I saw what happened to it today. This is an indicative of a market that must be really nervous. If you'll take a look here, this is the intraday chart of it, that 30-minute. We had a move, actually went from 10 Well, not quite. Yeah, just about 10 to 15, and then it backed off to 11.45. That's a sign that we got some volatility coming. I don't know what's going to happen from this level, but if it can make, that big of a move very shortly, that's half of the way to that level of 35 that I want. Well, a third of the way to the level of 35 that I'm looking for. So that's a sign that we're going to have some increased volatility. So watch this volatility index, because it does trade well off Fibonacci numbers and patterns, and it has the VIX index to do it with the ETF, and it also has VIX futures, and those are interesting to watch also. But on the forefront, I think the main thing is to watch these bonds and notes, because folks, they are extremely oversold. Watch the rally that we'll probably get here, but we've been down just about every day this week, Monday, Tuesday, Wednesday, Thursday, so we should be due for a bottom here either today or possibly Monday, and then we'll see what this rally is going to be in bonds and notes, because I think the market has said it wants to go a lot lower, i.e. lower bonds, lower notes, higher interest rates. So that's the main one, to watch very, very closely as you look at some of these things that we're watching. Remember that the statistics for the holiday come into effect here. The last 2 days of the month and the first trading day of the month are the most positive. And since we have a holiday on the second trading day of the month, and the day before that day is a very, very positive day, so that means that the 3rd of July should be a bullish day. However, if the 3rd of July is not a bullish day, that's telling you that you don't want to be long stocks coming into Wednesday morning. So if you have a bad day on the 3rd, be careful. Just like the old adage, in order to have a happy 4th of July, don't forget to buy a 5th on the 3rd. But that's back in the old days where they didn't sell booze in Indiana on Sundays and holidays. Okay, let's get back to this. But this is the bias that we're looking at right now with the stock market. We should have a bullish 3rd of July. If we don't, that is telling us that we're most probably heading down with that Bradley model to take us down into the end of the week or early next week. The days between the 7th and the 10th, I'm looking at the 10th of July. And we have Norm Winsky coming on my show on next Thursday, the 6th, because he has some really strong astro points that he wanted to go over with us. So those are some of the things that you want to be looking at with some of these things. Tomorrow on my show, I'll be looking at some of these foreign exchange pairs, because they've had some good moves today, and we also want to update the gold and silver and the crude oil and some of the futures that we look at tomorrow because of the weekend coming up. We're going to have some no question that we're going to have some increased volatility. The $64 question is, how much are we going to get, and how long is it going to last? That we don't know, but we will find out eventually. That's what we're looking for. And that's the key to this stuff, that when it gets to a spot where you've got to put a trade on, you just have to pay your money and takes your choice. And that's really what you need to do, because, you don't know whether the market's going to be up or down at these times. And so you just got to be able to say what is my risk, to see if I'm going to be right or not. And then you just do it and go from there. But remember, we're way up in the air here still in all this stuff, folks. This market has not corrected anything at all. This was nothing today. Live every day in an attitude of gratitude, and may God bless.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.